Everyone, we're just going to wait another minute or two. Thanks so much for joining us today in our E2E COVID-19 Survival Toolkit presentation. We're going to talk about innovation, lean innovation today. But we're just waiting for a few more people to log on. We had over 100 people registered. We had about 30 people, 29 people here on. So let's just give it another minute and then we'll be ready to go. Okay, Pam, I think I'm going to get us going, if that's okay. First of all, I want to say thank you to everybody who's joined us today. This is the second in our series of online presentations. And if we could make sure that we mute when we're listening to the presentation, that would be fabulous. Today's presentation is about innovation, and as we did in the first one, and we will do in subsequent events, which we're doing every 2 weeks, we're going to start with a story from a traditional organization that basically talks about how the challenge that we're talking about in the day is being addressed in traditional organizations. And then we're going to introduce you to somebody who is or was a RIC Centre client in the startup community and see how they're addressing the same challenges. I've got a couple of folks that are having a difficult time hearing, and I'm going to ask Jenny to kind of message with them in the background to see what we need to do to make sure that that they can hear. Pam, you can hear me fine?
Paul, I can hear you fine. Yeah.
Okay.
Yes, good. I can hear you, Paul. Sorry, I'm not driving, so I'm going to mute myself.
Okay. Okay. We have two speakers today. The first of those is Biju Misra, who had strategy at Enbridge, and he's going to talk about the challenges in the COVID-19 survival world from the perspective of Enbridge. And then we're going to follow that up with Andrew from JustWealth, who's a successful startup that was mentored by the RIC Centre and is scaling up and having a great run in the markets, and talk about some of the opportunities and challenges that they've seen. And then we're going to close with Q&A. We're going to ask you to stay muted as we go along, and then we're going to give you the opportunity to kind of weigh in the chat with any questions that you might have. And we will communicate those questions on your behalf as we go forward. So on that note, we're going to turn it over to you, Biju, and head off and give us your presentation.
Perfect. Thank you, Paul and Pam, for this invitation to come and talk about Agile innovation in general. What I thought, I have about 4 or 5 slides. So what I thought we'd kind of go through some common definitions as we go and kind of look at the landscape, and I'll then incorporate into that some of the things that are happening today, as well as my own experiences from early stage startups and things like that. So just to give you a sense of my background, I've been at the company for about 12 years. I got my genesis, or I started my career in a startup, then I was a co-founder in a couple of them, and then kind of progressed in corporate life, and here I am talking to you about Agile innovation. The quote that you see in front of you, I think applies to a lot of things today. So plans are great, and there are a lot of things that you can plan for, but then you have things like COVID happen, or other black swan events, which are kind of defined as things you have really no control over, but still need to respond to. Having said that, I don't think it's just a matter of COVID. In general, if you look at what's happening around you, around organizations, things are changing really fast. So the context, just see here. Yeah. So the business context is this. We have a lot of changes around us. So if I relate to my own industry, price of oil, and other competition when it comes to renewables and so on. But this is true for probably every industry that we work in. So markets, globalization, as you can see the impact of, when one country kind of has a problem, then everybody kind of feels with it, depending on the size and complexity of what we're talking about. Customers are changing, demographics, generational shifts, switching costs for customers to move from one to another isn't that expensive anymore. In general terms, a lot of personalization that's going on. So you have to kind of respond to what the customer need is. And of course, the cost of technology continues to go, continues to drop, and continues to be disruptive in what's going on. Connectivity. So we tend to be more connected when it comes to social. Bad news does travel fast. So you have to kind of manage that as well. And yeah, you can have competition that kind of comes in, a lower barrier of entry, and people can innovate faster today than they were able to 10, 15, 20 years ago. And of course, you have things like pandemics, financial meltdowns, all sorts of things that are happening. So in many ways, if you kind of look at just day to day, if these events weren't happening, you still have to kind of keep ahead, right? So innovation really isn't an option, regardless of the size of the organization you're in. It's important for us with 18, 17,000 people, as it is for an early stage startup with like 10 people, or just a sole proprietor who's actually delivering a set of services or other. And so in that model, you have to adopt, you have to adapt, and you have to do that at speed to make sure that you are keeping in touch and surviving. Right? This current situation just amplifies that reality because of just the conditions we're in. So it's even more important now that everybody kind of think about, well, how do you survive and what do you do? So some definitions, and I thought this was important as I was kind of putting this together, because it's important to have a common frame of reference. So what's innovation? In general terms, it's how do you turn an idea into a product or service, and or adds or creates values in an organization and to customers. So for larger companies who may not have customers per se, it's about how do you go faster, cheaper, deliver a set of services to the stakeholders that you have. If you are in a customer-centric business, then how do you create things that actually add value to them, right? And that's driven by a gap in the market, a change in business model, or a change in environment. In some cases, like today, everything changes all of a sudden, right? And that's what they're called, like these black swan events. Agility is the ability to move quickly. And it can be argued that the larger the organization, the slower it is when you move. However, that doesn't lead to survival in the long term, right? And it's true for across industries, and nothing unique to where I am today. And you have to respond to changes of all kinds, anytime. And that comes from looking at what you're doing, eliminating the barriers that you have, and doing is more important than just thinking about it, And that's true for a lot. I work with lots of early stage founders where there's lots of thinking that goes into what works, what may not work, what will happen, what won't happen. And you have to get past that if you actually want to go about it. And that's where agility comes into the picture. So agile innovation is how do you identify opportunities that give you a competitive advantage in some way and staying ahead of the competition, right? And you do that by the agility aspects of it. So a lot of discussion, I'm sure everybody's heard about agile methodologies, et cetera, that kind of started in the IT software industry. But that's kind of evolved now to where it applies to a lot of things in business. And it's not just about methodology as it is about your own thinking about how you respond to what's happening to you, right? And that comes from, well, experimenting, learning and correcting, but you have to do it really at speed, as quickly as possible. And there's lots of discussion, lots of conversation you can find in the marketplace about, how do you fail forward? How do you fail fast? What do you do? I am of the belief that it is true that you have to fail to learn and correct, but you try to, how do you do that while minimizing cost and impact to you as an organization? Bigger organizations may be able to sustain that more, whereas startups and or mid-sized companies may not have the luxury of, in times like this, where you have lots of money to just throw at failing. And I think that's not a sustainable business model. If you just say, well, we're just going to fail a lot and see what happens, right? There's competent failure and there's incompetent failure. And what you want is competent failure, that you learn something by failing, we do it quickly, you do it cheaply, so you can still dominate a marketplace, right? And you end up building what's needed, not what I aspire to be, not what I think is needed, but actually that's evidence-based, that's actually a particular requirement in market. And you'll see in the, when Andrew sort of talks about what they've done in JustWealth, you'll see that. You'll see this constant identification of saying, oh, that's happening based on where we are. Okay, that's probably an area that we should focus on. And it's a culture and a concept that you have to have, right? So that's kind of how I would define agile innovation, regardless of size of the company and number. So just some context. So what can we learn from others when it comes to this? I'm sure many of you have heard of Kodak. They're actually first to hit the digital space, but they thought film was everything. And that because, well, it was headed by a whole bunch of chemical engineers who could never see beyond what's happening. Blockbuster, the same thing. Cheetos lip balm. I found a really good example because two companies came together and said, oh, people like Cheetos and they use lip balm, so why don't we mix it all together and see what happens? And that would be a success. It wasn't. It was a disaster. So success of one product that you have may not carry over into another product that you build. And that's something you have to kind of account for as you go. Even for us, regardless of industry, we have that today. We have all sorts of economic pressures that are in the marketplace. There are lots of investments that we do in renewables and other things, only because you have to kind of assess where you are in the market, what's happening around you, and kind of go that way. So some things to learn from our experiences, as well as others in the market, is that if you don't change, then somebody was already doing it. So you're actually already behind the eight ball. So if you're not changing today and thinking about how you can be different and what exactly that difference is in the marketplace, then you're probably already late, right? You have to pay attention to what's happening around you. Many years ago, if you look at the energy space at large, everybody realized that renewables would be a fact, that electric cars would happen, and that people would move that way. And if you look at all energy majors, everybody's invested in building out a renewable portfolio for that reason, because that's kind of what happens. Think of good stuff and test and repeat it, right? So sometimes you're like, oh, I don't know, should I enter, should I enter? But if you think there's an opportunity that you actually have some evidence that that opportunity exists, then you should build good stuff. And then you should test it in the market, and you should repeat that process until you actually get something. Be more evidence-based than just kind of hoping and praying that all works out, right? And the other thing is, if you look at all these cases of failures that have happened in innovation, as well as if you look at in general in marketplace, there's a tendency to maximize the investment to know what it is that you're trying to do. And in any agile innovation, you actually minimize the investment to get to the minimum viable product, as you may have heard, or a minimum awesome product, depending on how you want to refer it, to really see what it is that you want. So we're, as an energy firm, we have in Ontario, we have over 4 million customers who use natural gas, and we're like, yeah, there's a shift around going to digital. So yeah, let's have e-billing. Let's have people go and look at their own bills and kind of reducing, our work that goes into distributing those bills. So that's small, but yet relevant. And of course, I talked about the green element, which is let's invest a little bit, see what happens, and then expand that portfolio as we go. Even in, I remember in the second startup I was in, we were a data company. We had some proprietary data that we had built around communications and so on. And we thought, okay, we're a data company today, and we're doing pretty good when it comes to providing data to telecommunication companies. But then we also saw that there is value in building applications that leverage that data to drive decisions, and we kind of moved in that. But we said, well, do you spend a lot of money doing that, or do you just kind of look at one use case, right? Just find that one customer, one use case that actually validates and verifies that there's actually something here worth pursuing. And that became a big business for us as we went through. And that was because we were more market and customer driven, right? And it's very, I see this a lot. And even when it comes to, if you look at large organizations and projects that occur, those are also kind of innovation in another way, because they move the company to be better, faster, cheaper. You still have to assess, like, is that really a requirement? Is that something we actually need? What will the outcome look like? And then how do you test that outcome, right? Some of the things we do, there's an automation exercise that we're doing. Do that all the time. In the Center of Excellence of Automation, we kind of look at an opportunity and say, I don't know, is that really worth doing or not? And how do you test it? How do you assess it? And how do you assess the value that it will bring in what way before you actually engage and spend more money? So that's a similar concept that even if you have a product today, you should kind of say, and if you're thinking about what's happening, remember, pay attention to what's happening around you, then you build something, and you build something small, you test it out. Sometimes just actually talk to people who may actually prefer and buy it, and understand that use case before you spend a lot of money. And I'd argue that you don't have to spend a lot of money to do that, actually. And there's lots of cases out there of companies who really evolved in looking at what's the minimum that you need to know there's an opportunity, right? So that's the learning from others. So how do you do this? Like, what's the, it's great. Yeah, agile, innovation, fantastic. But maybe you're just 2 people in a company, and maybe you're 20,000 people in a company. There's some common things and themes that occur in this exercise. One is to be hyper aware, and you'll hear Andrew talk about this. One is to be hyper aware, which is you're constantly observing the environment around you, observing the customers that you have, to see if there's a problem or opportunity that you can capitalize on. And that comes from looking at customers. That also comes from looking at scanning the technology landscape, because landscapes change. The new technologies emerge that can be disruptive in many ways. And how do you capitalize that, or should you? And also, it is true that there's lots of people who would tell you that, you just kind of focus on what you're doing and don't pay attention to the competition. But that's not actually true, because especially if you're a starting company, emerging company, competition has a lot to do with it. You have to pay attention to what's happening and who's doing what, and what does that mean, and are they doing something that you can actually pivot on and really dominate the marketplace, right? So that's kind of the strategy piece of it, because strategy, the best definition I've heard is, the actions that you take to become a monopoly, right? A defensible monopoly in your marketplace, right? And that comes from being hyper aware. That comes from knowing which way to pivot, knowing what technologies may be coming that are disruptive that you can ride the wave on until you find the next wave. And then what is your competition doing that you actually take and leverage and pivot and move in a different way to create that defensible monopoly, right, in your marketplace. So that's part one. The other one is start small and scale fast, right? Big big things, big programs, big projects, and there's place for them. Don't get me wrong. Every organization, there's big things to be done. But when it comes to innovation and kind of testing, what we found is that creating big programs creates a lot of disruption. Whereas if you start something small and say, here's the basics of what we need, and let's test it to see if it actually makes sense, and let's talk to the customer to validate and iterate, that's faster cycle, that's much better than actually looking at these big things that take a long time. So that's one. Fail fast, learn fast, be cheap. I like being cheap. It's very important to be cheap, especially when cash flow and other things are an issue. And you do that by learning in the market. Get to the minimum viable product. And there's lots of ways to do that, by the way. And today we just have half an hour, but there's lots of techniques to do a lot of these things. And I think there's a follow-up, and we can talk about that in more detail. Fail fast, learn fast. So you have to get the organization kind of oriented towards how do you learn fast. And that's hard. The bigger you are, the harder it is to instill some of these things, right? And learning the market and pivot. And that's the competent failure, which is how do you get there quickly, not spend a lot of money, learn from a set of customers, and then change to build what you need that we talked about. You also have to have processes within the organization for fast execution, right? Allocation of resources, have smaller teams, have self-running teams, have more authority in teams. So it actually becomes a more decentralized approach to management than a top-down approach to management. And that's because you have to be decisive and you have to move fast. And you have to change the process. So if you're looking today in this market today, in this environment today, and if you're like a emerging company, probably going, geez, like what do we do now? Because what we were going to do, and actually in the last session, I think we're talking about marketing. There's a great example of these people, of this company that was making software for the massage industry and so on, and suddenly everything shut down. But their immediate reaction was, okay, I got it. How do you focus on the long term to retain customers? Fantastic. And what they did was they actually created a book of what their customers need to think about. They didn't really anticipated in doing that, but they reacted to that, the situation they're in. Small example, but you can scale that to so many things where if you're in a situation where today you're like, okay, what do I do? What do I do to keep my customers? Is there a way to pivot where I am? Is there certain services I can offer that I didn't before? And it's true for us as well. Right? Bigger companies challenges are bigger because you have lots of customers. You have to react to the situation. You still have to be safe. You still have to, keep to your values around integrity and respect and safety and all those good things. And it's always a good balance to see what that looks like. So allocation of resources, ability to change your business process within the company so you can react to things, right? And having smaller teams is when we get to faster execution. The advantage of hyper-awareness and insight, the advantage of that is that you start seeing and observing the trends that may be emerging, right? I think post-COVID, it would be irresponsible for all of us to think that we won't have another pandemic. There's actually all indications that maybe back again, or there's a different strain of it that may be happen. And this won't be the first. This isn't the first, per se. Other pandemics have happened. And this won't be the last. So hyper-awareness would kind of say, what does that actually look like? What are the learnings from this exercise that we need to have so we can have a sustainable, driven, and a profitable business over time, or diversify the set of products and services you have to make sure that you can survive. And all that goes into point 5 around leadership. A lot of organizations, I've worked with small ones, I've worked with medium ones, I've been co-founder in a couple of them. I think that's a very kind of a critical piece of how organizations run. You have to change in sort of how you operate. You have to adopt or adapt because you're forced to do it now, but that's just in the DNA that you have to build out. You have to be decisive because agility requires quick decisions, a recognition that you may fail, but that's okay because at least you'll learn faster and you'll be cheap about it. And you learn from your customers in your market. and you'll change. So you have to be decisive. Otherwise, the longer you take to make a decision, the longer it takes to get to the end. And you have to be curious all the time. You know, today is just a circumstance we're in where we have a pandemic kind of a situation where we're being forced to do certain things. But as leaders within organizations, you have to be curious all the time as to what works, what doesn't work, why it doesn't work, what do you do? And you really have to ask, you know, sort of the what if questions, right? Challenge the status quo, because it's not about today, it's about in general. And when I talk about the business context, if you don't challenge your status quo today, as all organizations are and are being forced to, then in a competitive environment, in a small, medium-sized business, people will eat you for lunch, right? Because they are doing that, right? And so that requires a culture and a mindset, the culture within your company as to how you have a learning organization. Are people learning and connecting the dots? And are you okay with having this decisive, adaptive, fluid, you know, hyper-aware situation, right? And innovation, I would say, here's like 3 things that actually come about when you look at a marketplace. There's 3 categories of it. There's a cost value category, innovation that comes from something that's cheaper. You look at an opportunity like, you know, I can make that cheaper, right? I can make it. Then there is an experience value category, which is I'm going to do something that makes the customer experience just better. So people come to me, right? And I kind of look at these 3 categories as how do you identify opportunities? So one is a cost value, that I can just do something cheaper, perfect, with whatever way possible. And then there is an experience that I'm going to deliver a superior experience to the customer base that nobody else has. Remember, the cost of switching is pretty low, right? Then there's platform value, which is you build a community. You build a community, a platform that people come, and they come because of the community that's there. You know, LinkedIn is a good platform value. Good platform value example, right? Those 3 things in your hyper-awareness mode, if you kind of look at those 3 categories of innovation and then attach the agility aspects of it, which is how do you start small, scale fast, fail fast, learn fast, learn from the market, learn from your customers, engage your customers to see what they like, what they don't like. A lot of times on Instagram, I see these pictures that people come saying, oh, we have 3 views of what our app looks like, you know, vote for which one. That's actually a way to learn fast and testing the market in a broad scale, right? So those things you have to put in place to actually be agile and innovate at the same time. It is true for any size, and I think these principles apply. We do it all the time now because, you know, we are conscious of our cost. You know, we want to be here for the long term. We want to diversify and invest, and we want to make processes within the company faster and cheaper so that there's capacity built to go and have people do a lot of other things in the company that are pending. And those are the things that you have to be okay that you may try something, but you may fail. And we have a series of innovation labs in the company that are driving a lot of, you know, pipeline optimization and a whole bunch of other key projects that actually drive value within the company that actually translates to the customer. Yeah. So I think those are my 5 slides. That went by pretty fast. Any comments, questions? Happy to answer. I know when it comes to specific frameworks, in all those categories, I think there's maybe another session planned. I just didn't think there was enough time today to kind of go through in some detail of how you do some of the things around design thinking and Kanban boards and everything else.
That's great. Thanks so much for your time this morning. We're going to ask folks to hold their questions to the end. Sure. And then submit them via chat. And we're going to kind of pivot more to, you know, the smaller business now and how the smaller business works. And I guess one of the ways that we'd, you know, I think in some of the businesses that I've started, you know, in larger organizations, we've got processes. In smaller organizations, we've got, what are we going to do this afternoon? You know, what's that one thing that I'm going to choose, that phone call I'm going to return, that email I'm going to write, the proposal that I'll submit, etc. So we're going to kind of throw it over the wall to Andrew now to get the perspective of not a tiny business, but an earlier stage business. And we will mute ourselves again for a little while, give it to Andrew, and then we'll loop back in the end to take Q&A.
Hey, Paul, can you hear me and can you see my deck there on the screen?
Yes to both.
Yes to both. Okay, good. Well, thank you very much for having me today. And I'm glad I could speak and talk about what we've been doing at JustWealth and kind of the innovation principles and culture that we've created, and how that's helped during this COVID-19 pandemic. I think kind of the structure of what I want to do is kind of what we did, what happened, and then finally what's next. And I think the principle here is innovation never stops. You can't rest on your laurels. You have to continue on and keep innovating, because as Biju said, the competition is out there doing it. So if you're not and you're standing still, they could come at you. But first, before I get into that, I thought it maybe be good to provide a little bit of context on myself and JustWealth, so to put it into perspective of who we are. JustWealth, we're an online portfolio management company. We started in 2015. We started working with the RIC, I believe, as a client and as a tenant in their facility about 2017. And they not only provide the guidance and kind of the support, but they've also helped us with the exposure. And for those of you, if you're not part of the RIC, some of the things that they've helped us with in gaining that exposure is, some of the awards that we've been nominated for. So those are just some of my personal awards about being an Entrepreneur Innovation Leader of the Year last year. But there's also business awards too, that their exposure has definitely helped with. But what I would say is, just to give a little background on JustWealth and what a Robo-Advisor is, and as I get in and I talk about this, and basically what a Robo-Advisor is we're taking a traditional investment experience and we're trying to make it as efficient as possible and delivering an effective end product to investors. So traditionally what people do is they would go, if they want to invest their money, they go to a bank, they speak to a sales representative at that bank, and they probably buy a portfolio or investment product that was manufactured by that particular bank. What we're trying to do here is kind of take a lot of those middle people out of the scenario and have the investor directly and more closely connected to their investment portfolio. And that seems to have shown a lot of benefits to investors, and has helped them out during this time. So if we think about some of the aspects of innovation that a Robo-Advisor completes, this isn't necessarily something we created for COVID-19. This is just the principles of the business, and really trying to be as efficient as possible in communicating, operating, and delivering our advice and our products to our investors, has shown to do well during a time of kind of lockdown and quarantines and whatnot. But one of the things that people have benefited from as a Robo-Advisor, and more particular during COVID-19, is the convenience and the easy to use, right? So during COVID-19, business didn't really change for us operationally. We have a digital experience. People speak to us, phone, email, video chat, and then internally, operationally, at JustWealth, again, it's a very digital interaction. So we didn't really experience any hiccup from a business operation standpoint because of the innovation and the focus on being as efficient to our clients as much as we could. So that extremely helped us out. Some of the other things that people like about a Robo-Advisor is the lower cost. We talked about kind of keeping people closer to their money and taking people out of the process to make it more efficient. That has enabled the cost of our products to be significantly lower than what the status quo is if somebody was to go to the bank. And during a time of market volatility, like the stock market has experienced some volatility recently, you want to make sure that you have as much as your money working for you in the market rather than going for fees and paying fees. So that has proved to be a catalyst for additional growth during this time. And finally is the fact that as a Robo-Advisor, we're continuously monitoring and rebalancing investment portfolios for investors back to whatever they should be for that particular investor, right? We have a personal portfolio manager is watching the client's portfolio and making sure it's reacting the way it should be in a time of turmoil. Now, these are some of the efficiencies that a Robo-Advisor tries to distinguish themselves versus other investment providers. But those are just kind of, I would say, table stakes. There's many things that we did during COVID-19 to enhance our experience. It wasn't just saying, okay, we've created an innovative, efficient process. That's all we're going to do. It was all about pushing that envelope and making sure that our clients were being served the way they wanted to be, and being kept comfortable. So, what we did during COVID-19, we were very much on the offensive when it came to our communication. One of the things that we did is during the time of late March, there was a lot of market turmoil. The markets were going down, and there was a lot of uncertainty. And for us, we took the approach of being a lot more agile in our communication. So our clients received 3 investor notes through email and on our blog in basically a weekly notice. We did a YouTube video on our YouTube channel to get that our message of kind of calming and consistent voice during this turmoil. We wanted to get that as much as possible. But and I don't doubt that a lot of business owners or senior executives at firms did the same thing during that time, and are still doing that right now. But I think for us, what was important is establishing a process to be able to deliver on those communications, to get it out to the correct people as quickly as possible. So a lot of things go on behind the scenes. So it could be just updating, making sure your email list and your client list email is up to date as much as possible, and establishing a process on how to keep that updated. We personally use MailChimp as an email tool to get that out there. And we have a strict, regular process for making sure it's as up to date as possible. We usually do it on a monthly basis, but obviously during that turmoil, we increased it to a weekly basis. And you may, depending on your communication strategy, may even be a daily basis. One of the other things that we noticed during this time was a lot of people wanted to get in touch with us, and it was through email and obviously telephone calls, but our web chat on our website picked up quite significantly as well. So, making sure that that's being able to be managed in a way that is efficient, and you're able to get back to people as quickly as possible. But if you can't, having a process to enable somebody to still get in their question, and you'll get back to them in a prompt manner. Now, what this led to, we believe is something was pretty remarkable. Not only did we have a positive consumer and customer experience, and the feedback that we were getting was very easy to see that. But I think what's most important for our business is our assets under management, which is how we generate revenue. The more assets we have under management, the more revenue we're able to generate. That actually increased during this time, which is something that is probably can't be said for many investment portfolio managers during this time. It was well, you can imagine the markets went down, and they went down quite significantly. We had more growth to compensate for that loss in the markets going down. So we experienced our assets under management grow, and not from new clients, but also existing clients that were looking to make additional contributions to their account. That message got out and about the success that we were having, and we were just recently published in the Financial Post a couple weeks ago about our experience, and how a certain demographic was kind of experiencing this turmoil in the markets a little bit more positively and being a little bit more proactive in investing some more money as millennials. You can see on the slide there, it talks about millennials cashing in. And then just yesterday we were in the Toronto Star as an expert, a voice of expert for how financial advisors reacted and what they should be doing this time. So it's it was good to be known as we gained, obviously our business grew, we gained obviously press exposure, and really established ourselves as a subject matter expert and a voice. Which I think is important, and I think a voice of calm and consistency, and a welcoming voice during a time of a lot of turmoil. So that's kind of what happened. But I think going forward, it's most important for all of us as business leaders to make sure you're always keeping innovating. And I know for us, it's something that we had plans in place to continuously innovate, and it's not stopping because of this. We are going to, continue to push on during a time when could be tough for some businesses, but we kind of have this kind of pillars, if you will, or that says like you always got to be continuously focused on scale and your customer acquisition. As a few examples within our business, like we have a portfolio review process where people can submit their current portfolio, and we'll do an analysis for them to see if they're invested in a way that's best suited for them from a diversification standpoint, fees, breakdown, to an overall account structuring. We have that process, so it's all about now scaling that up. It's pretty good scale right now, but we want to take it to another level, to take it to the masses. There's obviously products offering when you go through a time of like this, a lot of changes happen, and so there may be a shift or an opportunity to potentially offer a new product. We have some ideas about that, and then. I think a lot of businesses are kind of going through this right now as far as customer service and changing the way they maybe are servicing their customers. But just making sure the way you are, if it has changed, you're doing it on an optimal basis. Web chat, making sure that's manned, making sure text messaging, interacting with your consumer and your customer as efficient as possible, and always pushing that envelope to the next step to provide that service that you want. But then those are all great things. The scale, obviously, on new clients and product offering and the customer service. But ultimately, I think all those things, if they're successful, you have to make sure that internally you have operational efficiencies. And I know, obviously, getting clients is probably, in most cases, the number one goal. But if you can't operationally manage those people or efficiently manage those particular clients, it won't go well. So it's all about, I think, taking a look and a snapshot of where you are operationally and trying to be more efficient with your time and your process. And we've got some ideas around that. And really, what I would say in regards to that operational efficiency, it's all about reporting, and tracking, analyzing. Those different reports and the tracking, and then adapt. And Biju was kind of talking about this. It's testing, it's adapting, it's you really got to push the envelope, and kind of something that we've been trying to do and have more process structured within our business via educated reporting features that we have the capabilities of doing. So those are just a few of my comments, what worked well for us, what kind of what we did, what happened, and then what we're looking for, and kind of different avenues that we're looking to improve as we innovate moving forward. I'm happy to stick around for any questions. I've got my contact information there on the screen if you want to give me an email or a call or a text. I'm happy to do that if you have any questions that come up after the fact. But yeah, thank you for the time and the opportunity to speak.
Well, thank you so much. We really appreciate it. We have about 10 minutes left now for some Q&A, and I'm going to ask folks if they can send their questions via chat, and either Pam or I will read them off and then read them back to the speakers. Maybe I'll start by making just a quick comment or two before we lose folks. We did write something a little more specific on our website. So if you go to our blog on the website, we wrote a piece on agile innovation for a rapidly changing world, and there's industry-specific examples of how things may be changing for you and your industry. So go have a look and see if that's of any value to you. Any questions? You're all being very shy. In the chat? Andrew, maybe I'll ask you a question. One of the things that, one of my favorite quotes, obviously we've all got Warren Buffett quotes, and one of my favorite quotes was, he says, it's only when the tide goes out that you can see who's swimming naked. And so it feels like, you know, in your industry, we've been at the end of a long economic boom, where there's, you know, no matter really who you're investing in, with exceptions, but most people earned a significant return over the last period of time. The tide's gone out, and lots of folks are seeing losses. And did that really create an accelerated opportunity for you? Did the fact that people were seeing their portfolios get really hammered cause them to check out something else?
So, great question. It's the markets had been, you know, we started in 2015, and the markets had, like you said, been kind of doing quite well for a few years. So it didn't really give people the reason to change who their investment provider was. But yes, this experience has definitely, you know, kind of opened the eyes of a lot of people to look at their investments, whether it's they're looking at it and it's down, they're like, oh, I got to make a change, or I want to look at other options, or they just have more time right now to look at it because maybe they're working from home. I'm not sure. But yes, you know, what we've seen more recently is an uptick in our portfolio review, people reaching out to get additional advice, and changes happening. And you know, the other thing, I think, to your point about people looking for maybe other options, also there was people who were sitting and they were just having cash, you know, kind of grow up in their you know, savings account at the bank. But we saw a lot of people take, you know, the opportunity to put that cash to work in investing. So those were a lot of current clients that had built up cash, and they took the opportunity to buy when it was low. All
right. But we have another question for you, Andrew, from Juan. And he asks, did your organization change or iterate MVPs since COVID-19 started? Maybe from the perspective of kind of the product sector that you talked about, of your four basic sectors?
Yeah, so I see it here. So did we change or iterate the MVP since COVID-19? So we haven't made any significant changes to the technology, of like, and the technology being our onboarding tool. We didn't make any changes to that. What we did do is in kind of have the ability to scale up and increase our bandwidth on our website. There was more traffic coming. But I think we didn't want to do anything significant during that time. And we felt confident in the tool that we had. Not to say that we will continue, you know, we're going to continue to improve it. But I think during that time, we didn't want to shift anything that may have broken the technology, if you will. Sometimes when you make those iterations, there's, you know, you take 2 steps forwards and 1 step back, almost type of thing, or 1 step forward, 2 steps back. So we didn't want to do that during that time, but that is definitely one of our pillars for the continuous client acquisition strategy. And we are working on just improving the technology at all times.
And we have another question from Ray for Andrew again. Ray asks, how your, you know, people care about returns. How did your algorithms perform over the last while, and are you making any changes based on the performance you see? Yeah, so the way the algorithm works, it's like when somebody comes and
they want to be a client of ours, they go through the algorithm and answer an investment questionnaire. So then based on the answers to those investment questionnaires, when you're just you haven't even become a client, you're becoming a client, we understand what is your risk level and what objectives are you trying to meet as an investor, which is a great process to go through, because if you're answering those questions and you can take on risk, you're going to be exposed to more risk. If you can't take on risk, you're going to be in a conservative portfolio. So the investor is kind of in the process and picking the portfolio for them. And then as long as that algorithm has worked in a way that it's recommended and selected a portfolio that is good, that's well suited for that investor's profile, the investor is going to be fine with it. We overall, across our client base, there was very little clients who left because they were exposed to too much risk. I think what we saw is people, if they did have the money used or earmarked for something, maybe the timeline increased on that. So there was, if you were going to be buying a home and you had a plan to buy it in the spring or even the summer, they were like, okay, I don't want to be exposed to the market. I want to cash out. But those particular people would have been in a low risk portfolio anyways. So it wasn't like they were really exposed to the turmoil overall in the market. So the algorithm, it worked in the way of, it gives people the risk portfolio and the risk level portfolio that is best suited for them. And, it helped them during this time. And, people who couldn't expose themselves to risk, they weren't. Right.
Great. We got one for Biju here. What are 3 quick important tips for an early stage company?
3 important steps. Be objective about what you're creating. So don't get attached to the idea. I think that's important because that opens up your horizons as to what you're trying to build. Second is, just what we talked about today. Be hyper-aware and be connected to the customer base and the opportunity you're trying to realize. And third one is because that also validates the idea that you have. And third one is hustle like there's no tomorrow and execute really well.
Yeah, good advice. Always good advice. Good times are bad. Got one in here from Paul Weber, who asks, how are you managing your business as a relatively new startup with less experience than more traditional investment managers who've been through several market downturns?
Yeah, good question, Paul. So we're a startup, yes, but we're not less experienced than traditional investment managers. Myself, I've been in the mutual fund and exchange traded fund business for 15 plus years. Our chief investment officer has been in for close to 25 years now, managing money at the big banks and for different high net worth investors and private clients and retail customers, managing tens of billions of dollars. So yes, we're a startup in the sense we're a new business, but by no means would we have less investment experience than traditional investment managers. And in fact, we've both, the 2 co-founders and the person ultimately managing the money have been through, multiple market downturns.
Well, I'm going to say thank you to both of you at the point. I would urge everybody to go back and look at the Agile Innovation piece that we wrote. One of the things that we did right there in answer to the last question is the biggest companies in the world formed, somebody's typing, if you could mute. The biggest companies in the world today, the $1 trillion companies that we're thinking about, by and large, most of them formed in the middle of the dot-com crash, if you would. And so Amazon and the like were, really basically they went through those really tough times earlier, and it position them to know what it's like in difficult times and deliver value to consumers, etc. So go check that out again. We'll also let everybody know that we got a really exciting next presentation coming up in 2 weeks on May 19th. We're going to have a presentation which is the #1 question we get with startups all the time. It's insights on seed fundraising during COVID-19. And our guest speaker is going to be Scott Kaplanis from Groundbreak Ventures, who'll be speaking. We'll also have another startup that will support that message as well. So, it's the number one thing we hear from our startups is how do we get money? And the number two things we hear is how do we market and get customers? So we're going to talk about the money piece next, and maybe we'll do the marketing piece after. I want to thank you all for your time today. A couple of people have asked if they can get the slides, and we've actually been recording this video, and we're going to post it on the website so you can come back and see it at your leisure. And if you want the slides specifically, let us know, and we'll see if these folks are prepared to pass them along.
Absolutely.
I'm going to say thanks again for your time. We really appreciate it. It's a tough time out there for both startups, scale-up companies, and traditional companies. But the ones that roll up their sleeves and do the work now are the ones that are going to maybe be those Amazons in the next 20 years. Have a great day, and we appreciate your time.
Thank you so much.